In this module, we are going to discuss the design and implementation of internal control and the testing of that versus the operating effectiveness of internal control and testing that. And the question is, do we need to separately test design and implementation and then separately test operating effectiveness, or can we test them together, and who cares? And as always, we want to be efficient and effective, follow professional standards, and document what we have done properly. Now, these two things are very clearly separated in standards. Why? Is it because standard setters intend and require us to do it separately, or is there some other reason? So, very clear, the standards separate the evaluation of design and implementation, which is a risk assessment procedure, from the testing of operating effectiveness, which is a control test to get evidence. Why is that done? Now, the first thing, kind of an aside, and there's going to be several of these, can't read standards in isolation. It's very clear from standards that you have to read and understand standards as a whole. And you shouldn't base your audit approach on a single line in isolation or single thing in isolation. And 207 and 219 and several other paragraphs say you should get an understanding of the entire section and indeed all standards, and that an understanding is less than understanding. If the standards said you have to understand standards, that would be a very high requirement. Just says you have to have an understanding of standards and of the whole section. And so if you understand most of it, you can say correctly, well, I have an understanding. I may not have a perfect understanding, but I have an understanding. So we have to, as we design a firm audit approach, we have to think about that and say, does our audit approach reflect an understanding of all standards together, or are we just pivoting off a single line? Now, the other aside that we have to consider is, what is a control? And I think before Sarbanes-Oxley, we had kind of a looser definition of a control. But when Sarbanes-Oxley came along and required an audit of controls, a rather expensive service, the definition of what a control was kind of changed and was elevated. And for instance, it's now pretty clearly understood that a bank reconciliation is not a control. It's a procedure. I think sometimes in the past we might have called it a control, but it's a procedure. And it doesn't become a control until there is an effective review of the bank reconciliation. Now, in a larger audit where you're also doing Sarbanes-Oxley work, this is going to be pretty clearly laid out for you. Those of us doing smaller audits are going to have to be a little more careful to think about this in the context of, is it really a control in a smaller audit, or is it like a bank reconciliation? It's a procedure and not a control. And if we're going to test controls, have to be careful about that. Now, the other thing we have to think about, again as an aside, as the standard setters wrote 315, where they very clearly separate D&I and OE, they also said an awful lot about scalability. And let me talk about the last piece first. 315.9 says that standards are written for all sizes of enterprises. Hence, they have to be written for very, very large enterprises. And that we have to use the scalability provisions for others. And 315 contains 35 or 40 scalability provisions where they say, okay, we've written this for a very large enterprise. If you're doing a smaller enterprise, scale it back. And that's mentioned in a bunch of places. A16 says the nature and extent of risk assessment procedures will vary based on the nature and circumstances of the entity. So they're saying, hint, 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 as you're doing risk assessment procedures in a smaller enterprise, think about how you can do it more efficiently. And the auditor uses professional judgment to determine the nature and extent of risk assessment procedures to be performed. So you very clearly are to scale back the procedures to be formed in a smaller enterprise by using the scalability provisions. Now, D&I is separate from operating effectiveness, and I think you can see in a very large audit with many complex controls and divisions and this, that, and the other, it's probably prudent to do it separately because you need to be very careful as you're doing your audit. Now, the other thing, in a very large audit, you are probably doing an interim audit. So you are depending that your testing of controls in the interim will be effective and appropriate. And that's very important, and you may not have a lot of time to pivot if it doesn't work. So separately evaluating design and implementation may be a very good idea before you proceed to test operating effectiveness. Now, hence, in a smaller audit, no, you don't need to, because you don't have that constraint. There aren't that many controls. It's not that complicated. If you're doing a first-time audit, you've never audited the entity before, you're really not sure how things work, well, you may decide in both controls and elsewhere, because you're really not sure what's going on, to do too much work. So you may well say, you know, before I rush into testing operating effectiveness, let me see whether the controls are properly designed and implemented. There are other risk assessment reasons for doing that. Let me just do that separately. So hence, in a smaller recurring audit, you may decide, no, I don't need to do that. And you are at risk of, and we've all probably had this happen, that we launched off on a control test, having not really thought about design and implementation, only having done 20 transactions to find it didn't work. And then we have to start over again and go, oh, okay, that didn't work. I got to do something different. So if you can tolerate that embarrassment, fine. But if you can't, you probably want to do D&I separately. So why have they drafted the D&I testing requirements from separately from the O&E testing requirements? Well, in a large enterprise, which standards have to be appropriate for, it's needed. And also it's kind of easier to draft the requirements because you can separate the two, and they are separate. So it's easier to draft the requirements. So a big firm audit approach will always separate D&I from operating effectiveness. And it's easier for the firm to design and implement their approach. Now, it may limit the operating effectiveness of the approach because you may spend more time than you need to fiddling around with D&I when you could have tested the two together. But that's the way a big firm is going to design their approach, because almost always doing it separately will be better. A smaller firm, on the other hand, need not do that. Now, another aside, what is the difference between a test of control and a substantive test? And in the big picture, there is none. They both get audit evidence. They both help us accumulate sufficient appropriate audit evidence. Tests of control conveniently can be done in an interim audit. So if we're under real pressure at year-end, time pressure, time crunch, to get audit evidence, well, let's get it by testing control in an interim audit. That's a good way of doing things. Now, a test of design and implementation gives no evidence, but a test of operating effectiveness, like any substantive procedure, gives evidence. Why then should we test D&I? Well, we've already said that, because if it's not properly designed and implemented, there's no point in testing operating effectiveness. So Why test D&I? Well, it's a risk assessment procedure, and as I said, what if operating effectiveness is no good? If we tested it, we would have found it was no point in going further. So we are going to have to use professional judgment as to if it is needed and what is needed. And so is it a large audit, a small audit, a first audit versus a recurring audit? And that will determine the nature, timing, and extent on D&I. And it will also tell us if we can later do D&I together with operating effectiveness. Again, we're taking a chance that it works, but if we're in a smaller audit where we're familiar with what's going on, probably it's going to work most of the time. That we'll test design and implementation together with operating effectiveness, and we'll find it works, find we get a small amount of audit evidence, and we can proceed. And that's, I guess, another question. If we test operating effectiveness, does it also test design and implementation? And the answer is it probably does. So when we do it together and it works, we've done two together and we've been efficient and effective. Now, another aside, inquiry alone is not enough to test operating effectiveness, nor is it enough to test design and implementation. And 330A26 says that pretty clearly. 500A6 says it's ordinarily not enough, which kind of contradicts 330A26. I think they were trying, standard setters were, I think, trying to say the same thing. I think they've just worded it poorly. I'm prepared to accept that inquiry alone is not enough for either operating effectiveness or design and implementation. But remember, inquiry, observation, inspection, and reperformance also can be done. Now, the problem big firms have is those things require professional judgment to do and document. Inquiry is quick and efficient. If you did observation, inspection, and reperformance with inquiry, that might be enough. Some firms, therefore, decide, because they don't want to rely on the professional judgment of staff, to go straight to reperformance for testing operating effectiveness. Is that a good idea? Now, as I said, how we test controls: inquiry, observation, inspection, and reperformance. A combination of all of those four things. And inquiry, observation, and inspection are pretty simple and easy to do. A little more difficult to document, and you've got to use a lot of professional judgment to decide what's correct. But there are four ways of testing controls. I would observe that it's inefficient to default to reperformance alone, which a lot of people do. They go to test a control and they just go, let's test 20. I would observe you could probably do a bit less if you took advantage of inquiry, observation, and inspection. My other observation would be my personal opinion. Reperformance alone may be as bad a test as inquiry alone. Now, as we talk about reperformance as a test of control, and in particular as the only test of control, we will all recall having worked for a firm, probably a large firm, because this is what they tend to do, and we've discussed why perhaps they might want to do that. But they test controls by reperformance, and they have a magic number of some kind, and it's 20 or 40 or 60, depending on the firm you worked for. They will have that as a sample size. So let's just talk about that for a minute. If we were to reperform a single transaction, is that pretty documentation? And most people would say, oh no, that doesn't, it's not very pretty. And some people will say, well, okay, maybe it's not enough. Maybe it's not statistically significant, and one isn't. So instead of doing one, let's do two, because two will be more statistically significant than one. And the answer to that is no. Both are equally statistically insignificant. So 3 or 10, and they're all sort of pretty documentation. But once we get to 20 or 40 or 60, that's prettier. 60 in a file, it's a beautiful looking spreadsheet. We've got lots of tick marks. It's very pretty documentation. But 60 still is not statistically significant. If we're talking populations of hundreds of thousands or millions of transactions, doing 1 or 60 is every bit as statistically insignificant. So going from 1 to 60 doesn't improve things any. Now, maybe by the time we get to 100, maybe it's statistically significant, but if we have a population of millions of transactions, we're probably going to need to be in the testing of thousands of transactions if we wish to be statistically significant. Now, this is one of the reasons that I say inquiry, observation, inspection, and reperformance. So if we're doing inquiry and observation and inspection and reperformance of a single transaction, we're not trying to get statistical significance, we're trying to get audit evidence. So once we've done 2 or 3 of those 4 things, I think we've got some audit evidence. So is one transaction reperformed along with inquiry, observation, inspection? Sure. In a small audit? Sure. With the proviso down there at the bottom that if there are 2 or 3 transaction streams, we need to do 1 from each transaction stream. So if there are 2 different transaction streams, we should do reperformance and inquiry, observation, and inspection of 2 or 3 transactions, depending on how many transaction streams there are. Now, the other thing, of course, in terms of units of time, 1 transaction takes 1 unit of time, and 60 transactions takes 60 units of time. So doing 60 can be an awful lot of time for no particular statistical significance, but it does produce pretty documentation, though pretty documentation is not an audit objective. Audit evidence is an audit objective. So I think, and this is up to your professional judgment, what you think is appropriate, but if you're doing inquiry, observation, inspection, and reperformance of a single transaction, maybe you're going to conclude that that's enough in a small audit to get you some small amount of evidence of control, and perhaps a small amount of evidence of control is all you need. And it won't take you 100 units of time, it'll take you 1 unit of time. So do standards require that we test design and implementation separately? And if you look carefully, no, they don't. 31538, which is the requirement to document, says the evaluation of the design of identified controls and the determination of whether such controls have been implemented in accordance with 26 has to be documented. So it doesn't say it has to be documented separately from OE, it just says it has to be documented. And 26 says the auditor shall obtain an understanding, not a perfect, not a complete, an understanding of the control activities component through performing risk assessment procedures. And then it tells you how. And then there's a bunch of scalability provisions. So no, it doesn't require us to test D&I separately, but that is the way the section is written. So it does not say when, and it does not say separately from operating effectiveness, and it also adds that D&I is evaluated by inquiry, observation, and inspection, not by reperformance, by the way. Reperformance is operating effectiveness. So if all we're doing is reperformance, we haven't tested D&I, never mind. So to conclude, must we test D&I separately? Maybe not. And when is it okay? In a smaller audit, revenues of under $1 billion, that's the definition of a smaller audit for me, and not a first-time audit, where in a first-time audit you may decide to just do a little more to make sure you understand. Must you reperform 60? Maybe not. It's a question of how pretty your documentation you want to be. If you want to be efficient and effective, probably not. To be efficient and effective, a combination of inquiry, observation, inspection and reperformance. Is one enough? Maybe. Use your professional judgment. And again, if you're using a combination of the 4 suggested procedures, maybe it is. Can inquiry help? Inquiry and a test of a single reperformance. Maybe that's enough. With a bit else, with a combination of the 4. Now, the section does not say that inquiry is no good. It just said that it's just not quite enough. You need to do something else. So sure, use inquiry with a little bit else. Can you test operating effectiveness and design and implementation together? Sure, why not? And again, if you're using a combination of the 4, you're fine. Do risk assessment procedures have to be done separately at the beginning? No, but it may be inefficient not to, as I've talked about. It depends on the complexity of the audit, and again, as I said, we've all had circumstances where we're busy testing operating effectiveness, and it doesn't work, and we go, should have tested design and implementation ahead of time. So it depends whether you can tolerate that in your audit. It depends how big the audit is. So testing them together in a smaller audit and not in a first-time audit might well be okay. So thanks for listening.